The newest African nations to announce intentions for tax collection from digital and e-commerce firms like Netflix, Google, YouTube and Amazon are Zimbabwe, Nigeria, Kenya and Uganda. Following the pandemic, cash-strapped African governments made a much-decried attempt to tax digital payments in order to increase revenue collection. The consumer goods and retail sector has experienced a significant disruption as a result of the pandemic-fueled rise of the digital economy and the unrelenting demand for online retail products across Africa. Well, to discuss this further, we're joined by a manager of domestic taxes at the African Tax Administration, Emeka Nwankwo. Emeka, thank you so much for your time and thank you for joining us this morning. I mean, talk to us about this. Why is there this sudden rush from African governments to tax these digital and e-commerce platforms?
Thank you. So I think before we delve into the announcements by the African countries, they maybe need to explain when we say digital taxes, what you might be referring to, because the announcements have been on different types of arrangements or taxes. So you have the income tax aspect, where it has to do with the income earned by the digital businesses in Africa. But for that, to avoid double taxation or non-double taxation, you've had the multilateral arrangements where countries come together to discuss how best to do it, which is being done under the inclusive framework, where we have the Pillar 1, Pillar 2 solution. However, while that conversation is going on and is being detailed and structured out, you have countries implementing what we call unilateral measures for the income tax on how they as a sovereign nation can collect these taxes. This is where the examples of Zimbabwe, Nigeria, and Kenya that you've given comes in. But in terms of a pure DST, digital services tax, that would be only Kenya in Africa currently. But most of the announcements you're hearing is around also the VAT aspect, which is the consumption tax, which is what we all pay when we consume even in South Africa locally. But the idea is to extend this to the digital services who are not physically present in the country and make sure that VAT is also levied or charged on the transactions from these entities. So you have like the recent announcement by Uganda, which was first put out in a public notice in April, and a second public notice that went out, I think, about 3-4 days ago. That has to do with the VAT aspect of it now, the value-added tax. And this is not the introduction of new tax in most places. It's basically countries now extending the existing legal framework for VAT, but then putting in place a compliance process to enable these entities who are not present, who might not be able to comply the way you have the local entities do that in a simplified manner.
Well, talk to us about the interest that we're seeing from African countries to actually implement these tax implications. And on whom is this burden likely to fall on? Is it likely to fall on the consumer?
So maybe we'll take on the VAT aspects first. VAT is a tax borne by the consumer. It's an indirect tax. So usually, even if you consume digital services locally, you would have had to pay VAT on it, except where it's exempt. So why you're finding that interest now across African countries is prior to now. People within a country find it their process already set within the traditional general system to comply. But with the digital service entities, they are not physically present, and sometimes you don't have jurisdiction to do proper checks and all. But now countries are finding a simplified system because there is no contest about whether they should pay or whether they should charge the VAT or not. The conversation is about how do you get them to remit, because usually you have where it's business to consumer transactions, meaning a foreign entity supplying to an individual who is not a registered business in a country. That doesn't get VAT charged or remitted on it because under the normal arrangements, you have local businesses, charging the VAT for foreign, imported service that they consume. But when it's with an individual, that doesn't happen. So most of the announcements you're hearing now is countries extending this to say that the foreign entities supplying into the countries should be able to account for the transactions they are having with individuals within the countries. Part of this is a way to deepen the revenue capacity of these countries. With COVID, we've seen how most things are now done online. We're all using digital channels to do transactions and all that. And like you mentioned, some of the streaming and the gaming industry also is booming. online. So part of the revenue objectives of revenue administrations across Africa is to find more ways to deepen their tax base without maybe introducing new taxes and all. While the burden for the VAT will be borne by the consumers, I think the further explanation would be also a case of neutrality and fair environment for competition for the entities. Because if I'm consuming a service locally in South Africa and I'm paying VAT on it, but where I consume the same service, exact same service from a non-resident supplier who is not physically present in South Africa, I don't pay VAT. That could distort competition because that means there is no VAT amount on the international aspect of the transaction while there is when it's local. So this is why you're finding a whole lot of interest now for those two reasons to ensure that they are also brought within the VAT compliance regime.
It does seem that a lot of the interest stems from the fact that African governments are able to expand on their revenue collection through this avenue. Exactly how much revenue, Emeka, do you think African governments can actually gain from digital services? I mean, is it indeed a viable or as viable an avenue as they believe it to be?
So yes, it's quite valuable. From the income tax aspect, that we might not have clarity on now. I mean, some countries have expressed concern about the current international arrangements for the income tax aspect and believe that that might not yield as much revenue as it should for African countries. But when we come to the indirect tax aspect under VAT or general sales tax, goods and sales tax, there's a lot of potentials. We've seen certain countries who have implemented these regimes earlier reporting additional revenue through these regimes. But what we need to understand is also that this is a frontier issue. Most countries are at the first step of it. We're at the beginning. So the potential is something that we'll see as we progress. But there's a huge potential. Countries have posted within Africa. We've seen where jurisdictions have posted up to billions of dollars in about 6-7 years of implementing a regime, and we've seen where within a short period of 1 month, 2 months, countries are reporting over $4 million just from that particular regime. And at this point, most countries are still working on the voluntary compliance aspects of it, where the system is set up to encourage these entities to actually voluntarily comply. And I think by the time countries move into the next stage, which will be the part where they get to monitor and enforce compliance on the non-compliant entities, we'll see more revenue coming for African countries. But considering where we are now and the fact that everything is basically digital, yes, we see a lot of potential for African countries in this. In fact, we encourage African countries to actually explore these avenues in shoring up revenue. If you look around that, you see that within ATAF, for example, for the income tax aspect, we've had a couple of publications on the impact of Pillar 1 for countries who decide that they want to go with the unilateral measure of implementing a DST, like Kenya has done. We've provided guidelines on how such laws can be drafted. And on the VAT aspect, we've provided guidance on what to consider and how to draft legislations and the policy around bringing in the non-resident entities within the VAT net. So it's something we see as a big revenue potential for African countries considering the direction of the business environment and the world at the moment.
Okay. Well, talking about the viability of this regimen, we know that for a lot of these digital platforms, especially streaming digital platforms such as Netflix, Hulu, Disney Plus and the likes, they're actually seeing a decrease in sales. They're experiencing almost a depreciation in the work that they're doing and in the market that they're operating in. How is that likely to affect a lot of these African governments that are looking to generate additional revenue from this digital tax?
So when we speak about this, I mean, the streaming industry is just one sector of many that is covered under these regimes. Now, if we look at what we've seen across Africa, it's not targeted at streaming businesses or the video streaming industry. It cuts across various sectors. So just like you would have within the traditional tax environment where you have the cycles, the ups and downs, is the same thing. This would happen as pattern of consumptions change and certain things affect how certain services are consumed. But the idea for African countries at this point is to put the structures in place to be able to collect these taxes as it should be, again, for neutrality and fairness. in extending these regimes to the non-residents. So while certain services might experience downturns in the business cycle, it wouldn't stop African countries from putting the framework in place to levy and charge and collect these taxes as businesses go through these cycles. So a specific sector experiencing a downturn might not, wouldn't or shouldn't impact the ability of a sovereign nation to set its rules and extend such regimes to every participant. Within every tax regime, or most times you find where you might have things like exemptions, or during COVID, for example, you had couple of measures put in by countries to allow businesses get through the pandemic and survive, and then help economic growth or bring back economic activity. So if it gets to that point, I'm sure jurisdictions will consider and see what they can do. But I think the main target now is to put in place these frameworks, to enable the tax regimes to be extended to the non-residents.
I mean, while it's commendable that, the idea is to put in place these frameworks, the other concern is that we may, in fact, be running ahead of ourselves, given the fact that in terms of digital access, we only very recently, I think, across the continent managed to achieve that successfully. In South Africa alone, I know that the 5G auction was something that only took place in March in terms of digitizing our economy locally. And so there is a concern that we may be running ahead of ourselves. Is that something that you see being a concern of yours, or do you think by putting down the frameworks, as you've explained, we're actually on track to being able to optimize the opportunities that lie in this particular sector and the tax regimes that we've been discussing?
So I don't think I don't think we're ahead of ourselves in doing this. Like you just mentioned, I think the most important thing is to put in place these frameworks, because part of what we actually need to be ahead, rather than we being ahead of ourselves, is being ahead in setting the right compliance environments, because that is the direction, the world is going. That is the direction businesses are going and transactions. We're able to speak because we're using digital channels. I didn't have to be in the same place with you, for example. And this is not just particular in terms of your industry. It cuts across everywhere. Daily meetings are run on digital channels. Transactions are done. We play games. We stream videos. We receive all sorts of services. So it wouldn't be a case of African countries being ahead of themselves. While internet penetration is something that Africa is still working on, it's also important that even if we're forward-looking, to make sure that the revenue legislative framework and administrative framework within our revenue authorities is prepared for this moment, even when we get to where you might find in the northern hemisphere of the world. But the idea is, again, have this framework, work what we have now. Because the other side of the conversation is, if we don't do this, then what does it entail for the local competitors who are getting to pay these taxes, and then the non-resident suppliers are not paying any of these taxes on the same type of services and supplies. So again, no, it's not African countries being ahead of themselves. It's a case of being prepared for where the world is going, right, and how business is done in the current environment.
All right, Emeka, thank you so much. We are going to leave it there. That's the tax administration expert, Emeka Nwankwo, joining us there to talk to us about the digital tax compliance on the African continent.